What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. What will affect your money, investing, the stock market, the next stimulus package, and we got some major breaking news here from the Fed here that just happened and from the Senate. An almost $300 billion bill just passed in the Senate, a controversial bill here, at best. We're going to go over both of those here in this video here. So if you haven't subscribed to our YouTube channel yet, make sure to click the subscribe button down below. It's completely free to do so you don't miss out on new videos. I will keep you up to date here with everything going on here in our country on a daily basis. And if you find these videos helpful, don't forget to hit the like button for us down below. Here we go here. The Fed, which is dealing with these we're all dealing with these high interest rates here, just raised interest rates yet again. I told you it would be coming here today, and here it is. Yeah, the Federal Reserve raises interest rates by another 0.75% here, 0.75%, matching June's historic move. They raised interest rates by 0.75% also in June. So 0.75% in June and now again in July. That makes it a 1.5% interest rate hikes here in the last 60 days. So interest rates are going up here dramatically. They also raised interest rates 2 times here previously. So interest rates here have gone up very, very rapidly. Here is what Federal Reserve Chairman Jerome Powell has to say. Remember, he is a Trump, he was appointed to the Federal Reserve Chairman position by former President Donald Trump. So he's not like appointed by Biden or anything. Some people get that confused here. This is kind of a double-edged sword. It's something what needs to kind of be done to help bring inflation down. Here's what he has to say. Let me know your thoughts on this.
Particularly in regard to expectations, it's been said the last few months that the risks of doing too little outweighed the risks of doing too much. Does that remain the bias?
So we're trying to do just the right amount, right? We're not trying to have a recession, and we don't think we have to. We think that there's a path for us to be able to bring inflation down while sustaining a strong labor market. As I mentioned, along with, in all likelihood, some softening in labor market conditions. So that's what we're trying to achieve, and we continue to think that there's a path to that. We know that the path has clearly narrowed, really based on events that are outside of our control, and it may narrow further. So, you know, I do think, as I said just now, that restoring price stability is just something that we have to do. There isn't an option to fail to do that, because that is the thing that enables you to have a strong labor market over time. Without restoring price stability, you won't be able to, over the medium and longer term, to actually have a sustained period of very strong labor market conditions. So, of course, we serve both sides of the dual mandate, but we actually see them as well aligned on this.
But as a follow-on to that, given the uncertainty and the sort of paradoxical flow of data you've been getting, if you're going to make a mistake, would you rather make the mistake on doing too much, raising too much, than raising too little?
We're trying not to make a mistake. Let me put it this way. We do see that there are two-sided risks. There would be the risk of doing too much and imposing more of a downturn on the economy than was necessary. But the risk of doing too little and leaving the economy with this entrenched inflation, it only raises the cost. If you fail to deal with it in the near term, it only raises the cost of dealing with it later. To the extent people start to see it as just part of their economic lives, they start to factor high inflation into their decisions. When that, on a sustained basis, when that starts to really happen, and we don't think that's happened yet, but when that starts to happen, it just gets that much harder, and the pain will be that much greater. So I really do think that it's important that we address this now and get it done.
Yeah, so let me know your thoughts there. He says that we have to do this now to help bring down inflation. I explained this in my last video. If you check that out, I'll link you to that here at the end of this video. Kind of explains how we've started to see the housing market cool off. People aren't bidding over asking price. You're not seeing 5, 10 bidders bid over asking price. Same thing with cars. And we are starting to see this already start to happen here in our economy. And we'll continue to see this happen even more. But it's a double-edged sword because people, if you go to, in fact, check this out. I actually just seen this video here. This is another kind of counterpoint here that will explain it a little bit more. Let me know your thoughts on this.
Stephanie, 3/4 of a point, what we were expecting, but the big question people have is how immediate could the impact be? What are we going to see?
Well, it's the impact on what? On mortgage rates, on credit cards. That impact can be immediate. Listen, if you are borrowing, if you're looking to borrow money, it is going to cost you more. So it's really difficult because when they raise interest rates, it's going to cause short-term pain. It makes it more expensive to borrow with the hope that in the long term, they're going to cool the economy and get prices to lower. But Chris, it's a complicated situation because when people keep trying to say it's a good economy or a bad economy, you can't. It's a complicated one because we have very low unemployment. We have strong job growth. And for people who can afford it, household savings is up and we continue to be out there spending. So when there is high demand, businesses are less inclined to lower prices. The question is now, with this additional rate hike, are you going to see things start to cool? The Fed certainly hopes so.
Yeah, so Fed hikes interest rate here on another 75 basis points as recession warnings flash. Because of high interest rates, or I'm sorry, because of high inflation rates, and now high interest rates going here because you have to do that to bring down inflation rates. So, yeah, we're seeing this all around here. The stock market actually jumped here dramatically today when we got the news here of this, when the Fed announced this here. So you could see it jumped up pretty dramatically here. About 400 points here, 436 points for the Dow ended up here for the day. That's about 1.37%. But the S&P 500 here was up about double. You know, they're on different index scales. But the S&P 500, which is the top 500 companies in the U.S. based on revenue, was up 2.6%. So about double. The NASDAQ, which is tech companies like Facebook, Google, Apple, was up 4%. And you could see here they all jumped when the announcement came out. There was a possibility that we were going to get a full 1.0% interest rate hike of 100 basis points. So we didn't get that. We only got the 75 basis point hike of 0.75%. So the interest rate hike could have been worse. It could have been even more. So the stock market kind of was happy on that. And I guess a lot of people were, I guess, kind of happy that they went ahead with the move, I guess, because it is what is needed. I know it's a tough situation that we're all dealing with, and well, nobody is happy that we're dealing with this inflation. And yeah, you can let me know your thoughts here in the comments section. But what will happen going forward? We're probably going to see even more interest rates hike here this year, and that's even the harder part of the pill to swallow. The question here is, how quickly can we see inflation come down? Interest on your savings, if you have any money in savings, new CDs or anything like that, will actually start to go up. So that's kind of the good thing on it, is that money in savings accounts, if you've realized here over the past 6 months or year or anywhere recently, money in savings accounts at local banks basically paid nothing, close to 0.0. And that was the kind of the negative part of low interest rates, is that the banks were paying low interest rates as well. Some banks were basically paying like 0.1%, 0.05%. Those were the kind of interest rates on savings accounts. CDs, not much higher, depending on how long of a CD you took out. So it's kind of a, you could get low interest rates on borrowing. Of course, when you borrow money, it's always higher than what banks pay. If you want to get higher investment money, typically you go to like the stock market, the bond market, because you take more risk there, etc. But money on savings account, which is very, very low risk, they're backed by the FDIC insurance, up to, I think it's $250,000. That's going to start to go up. You're going to start to see those interest rates go up because interest rates are going up here. So, yeah. So next up, we have the Senate here that passed the CHIPS bill. The bill aimed at producing more semiconductor chips here at home. Again, part of the large reason why we're seeing car shortages, because there's no chips, computer chips, and all sorts of other things here like cell phones, laptops, anything that has a computer chip. Here is what happened in the Senate today.
The yeas are 64, the nays are 33, and the motion to concur with an amendment is agreed to. Under the previous order, the Senate will resume consideration of the House message to accompany S-3373, which the clerk will report.
House message to accompany S-3373, an act to improve the Iraq and Afghanistan Service Grant and the Children of Fallen Heroes Grant.
So the Senate voted with a large bipartisan majority, meaning both Democrats and Republicans passed it with a large majority here today to pass a $280 billion bill, almost $300 billion. That's a lot of money to subsidize the domestic chip manufacturing industry. This is not chips like the potato chips, but computer chips, like the types that go in your cars, that go in your phones, that go in your laptops, even would go on a debit card or credit card, okay? All types of computer chips, and provide tens of billions of dollars for scientific research to keep the country's technological edge in the global economy. Some people would say we're actually have lost the technological edge to countries like China, depending on who you ask. The 64-33 vote caps more than a year of negotiations over the bill, which has stalled for months in the House because of progressive Democrats' objections to trade-related and other provisions in the bill, such as language to provide security safeguards for technological research. The bill, which is expected to have enough votes to pass in the House, we'll see here, because remember, this bill was stalled for months in the House because of progressive Democrats' objections. So we'll have to see here. Would be one of the biggest legislative accomplishments of Congress and would be a boon to the nation's high-tech manufacturing industry. This is the bill that Bernie Sanders has also criticized. We'll get to that here in a second. It is designed to reduce U.S. reliance on Chinese and other foreign manufactured chips in the military, hardware, and other products. The revelation that the Pentagon waived restrictions on Chinese manufactured components in weapons such as F-35 fighter jet caused controversy several years ago. It will provide $54 billion in total appropriations for chip and public wireless supply chain innovation, including $39 billion in financial assistance to build, expand, and modernize domestic semiconductor facilities, and $11 billion for Department of Commerce research and development. It will also provide $81 billion to the National Science Foundation, $20 billion for the National Science Foundation Tech Directorate, and create a 25% tax credit for investments in semiconductor manufacturing. Senate Majority Leader Chuck Schumer led the negotiations on the bill, hailed it as a historic and monumentous achievement. Says, quote, "We will look back on history and say this was a time when America really realized its responsibility to stay the leading economic and national security power in the world. It is a very, very significant bill." President Biden applauded passage of the bill and said it would lower prices on everything from cars to dishwashers because all that stuff have tiny little computer chips in them. I think this is Biden here who said it will mean more resilient American supply chains so we are never so reliant on foreign countries for the critical technologies that we need for American consumers and national security, he said in a statement released after the vote. Democratic Senator Mark Kelly from Arizona says passage of the legislation will be a big boost. And he said it will help create tens of thousands of jobs, which he said will become a chip manufacturing hub in Arizona. I think there's one going in Ohio as well. Probably all over the country, to be honest. We renegotiated the grant money and where the spending is going to be for the chips. I'm not sure if that was a recent negotiation here in the last few days, noting the differences between the legislation and what was introduced before he got to Congress. He said Intel is going to build 2 more manufacturing and test sites in Arizona, and that the Taiwan Semiconductor Manufacturing Company, the world leader in chip innovation, is in the midst of building a $12 billion chip factory in his state, Arizona. And that's a whole lot better than building it overseas. The bill garnered support of 17 Republicans, including Senate Minority Leader Mitch McConnell and other major Republicans, such as Republican Policy Committee Chairman Roy Blunt, John Cornyn from Texas, and Rob Portman from Ohio. Now, Senator Bernie Sanders had previously slammed this bill, saying it was a blank check for corporate welfare from the computer chip industry and for companies like Intel, who are already extremely profitable and make billions and billions of dollars, and that we could use that money, well, for a couple different things here. Is that one, and even some Republicans said this as well, probably the people who voted against it, saying that, number one, we should have more guardrails on this bill, saying that we can't just write them a blank check. We need to have more what they call guardrails on how to spend the money, more safety, nets on them. So basically saying you have to do this, and this to spend the money. It does seem like they have some of that on there. They're building plants in the U.S. to spend the money on it, etc., and it's going to create jobs here. But Bernie Sanders and some Republicans think that they needed more of that. So you can let me know your thoughts here on this. But on the other hand, we do need these in the U.S., and we have really seen the problems. Even I said this here recently until I was made aware of the shortfalls of this bill. That's the thing about almost any bill, and I'll be the first to tell you this. Almost any bill has pros and cons. Any single bill, I can't say any bill, but that's why I try to bring you the truth about bills that go through here. Like even the Build Back Better bill, like the Democrat bills, and the stimulus package bill, stimulus package 1 and 2 that were pushed through underneath former President Donald Trump, and stimulus package 3 that went underneath Biden last year. That was a Democrat only bill. All the Republicans voted against it. All those bills have fluff in there, or whatever you want to call it. They have pork in there, or stuff like that, whatever you want to call them in there. Especially large bills. Okay, there's always stuff that shouldn't be in there. It's honestly, it's just the way Congress does things. I don't know why they do it that way, especially these larger bills here. Now, if you're going to hear criticism about this, and rightfully so, $280 billion. Okay, so like anybody who's saying, well, we can't spend money right now because of inflation. if we spend any money, if we send out stimulus checks to the American people who are hurting right now, it would exacerbate inflation right now. Well, they just spent almost $300 billion. Are they worried about inflation? Of course not. Of course not. So that's the thing here, is that when this is kind of what really it irks me, is that they'll spend money when they want to, right? So yeah, you got to kind of realize here that, and like Florida Governor Ron DeSantis, they got $22 billion, and he sent out 2 rounds of stimulus checks, one for teachers and one for $450 checks are going out to children here. Some children, certain type of children. I'll show you the headline here just so you can see it. Yeah, so some Florida families are getting one-off $450 checks with children. So like Ron DeSantis, the Florida governor, he'll blame Biden for sending out the stimulus checks, and they blame it for inflation, but he'll send out stimulus checks. Like it's like the pot calling the kettle black, right? Yeah. So like, and remember that Biden's stimulus package was 1.9 trillion. Trump had 2 stimulus checks, and the first stimulus package was 2.2 trillion. And so that stimulus package alone was more than Biden's. And again, I'm not sticking up for either person, but if you just look at the math, it doesn't add up, right? And remember that inflation is going on all around the world. Even in countries that send out no stimulus at all, they're still dealing with pretty much the same roundabout inflation. So realistically, the inflation's really not from the stimulus. In fact, if anything, if we didn't send out stimulus to help out our people, we would just have more people living in poverty right now. Do we really want that? Do we really want more people living on the streets? More people that can't afford food? More people that lost their homes? More small business owners that lost their businesses? Like 40% of small businesses went out of business. And I don't care if you say it was Trump's stimulus or Biden's stimulus, because remember, Trump sent out 2 stimuluses and Biden sent out 1 stimulus. I don't care which president you try to blame it on. You could look at countries that sent out no stimulus at all, and they're still dealing with the same inflation that we are. It's just literally just Google inflation around the world. If you've been watching my channel, you know this. The inflation's all going on all around the world, and central banks and governments and feds all around the world are now raising interest rates all around the world. It's pretty much the same situation all around the world. Gas prices are actually higher in most countries all around the world. Recently, Europe had $8-9 gallon gas equated to U.S. gallons and U.S. dollars. So I mean, if anything, you got to spend money where it's able to, or where you need to, and you got to help out people when they need it. Because if not, you have Great Depressions. I mean, look at what happened in the end of the 1920s and 1930s, when there was no support for people, there was no unemployment, there was no food assistance, there were no stimulus checks. Literally, people just, I mean, the Great Depression there was way, I know that this pandemic and this depression or recession was bad, but they actually sent out 3 stimulus checks, unemployment bonuses, paycheck protection program, food assistance, SNAP benefit bonuses. Think of all the stuff that they did do this time around. And like, I get that they sent out like $40 billion to Ukraine, and this bill is $280 billion. But like, if you just put that in perspective, the last stimulus package alone was 1.9 trillion. And like Trump's first stimulus package was 2.2 trillion. That alone is, $4 trillion. So it's not like they haven't helped out the people. It's just that it's just kind of been a while if you don't count like things like the SNAP benefits that are still going on, and things like the rent assistance and mortgage assistance and stuff like that. So that's where like a lot of people are like, yeah, well, inflation is really hurt, and the state stimulus checks that are going on. So yeah, that's kind of the problem right now. Is so many people are hurting right now from inflation and now these interest rates. Is that yeah, it's really rough on a lot of people. So Let me know your thoughts in the comments. I'll keep you up to date here with everything. There's a lot going on here. It's just crazy. It's just crazy. So make sure to subscribe down below to our YouTube channel. It's completely free to do so. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And I will keep you here up to date here on a daily basis. You can click here to watch my newest video next. And here is my Social Security payment schedule coming out here soon. And it includes the $2,400 Social Security raise details as well. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.